What's up, traders? What's going on, goats? It is Tuesday, January 24th, about to be 9 p.m. Eastern Time. Hope everyone is having a good Tuesday, man. It's Trading Tuesdays, but guys, we're about to get right into the session, which is welcome to Digital Goats Academy, guys. I am your host, the Digital Goat himself, and welcome to Market Entries Part 2. For my guys that's on, y'all are free to talk. I'm gonna change it up today. Y'all are free to talk. Just, obviously with my introduction, just go ahead and let me carry that out, which I'm done. But anybody that's outside of my Zoom channel, outside of my Discord, if you're following me on YouTube and you find value in my channel, please hit the like button and please subscribe. Also hit that notification bell to stay up to date on my content. And let's just get into it, guys. We're going to talk about entries today, obviously, right? Hence the name. I know a couple of the guys in my community, they've been asking questions on like what's the best method when it comes to creating or formulating your bias for entry in the market. I know a lot of people are like, man, I spend too much time in drawdown, which is like, 30 pips drawdown or 20 pip drawdown, and they want a little bit more cleaner entries. Now, nothing guarantees anything that I give you guys. That doesn't guarantee that you'll get those entries that you desire. Anything that you see from somebody else doesn't guarantee you'll get those entries. What can help you put you at the best possibility for a good entry would be support and resistance zones, or as other people would say it, supply and demand zones. They're a little bit different, but still not too far fetched from the idea. But we're going to go into that, guys. I'm going to use NZD USD. And then from my community, I'm going to see what they're looking at and kind of use a setup that they're currently looking at right now to create an entry and see, how we would go about collecting the entry. That's not saying that we're looking to catch a trade, but we're just showing the best possible entries within the market, guys. So again, welcome. And yeah, let's get into it. So this is NZD USD, New Zealand dollar against the United States dollar. Currently, we've been in an uptrend. So I know I got a lot of chaos going on. I am going to pick something a little bit cleaner, but I figured that I would use something that I already got annotations on it. It just makes it a little bit easier for everybody to follow along. But if you see, guys, if you just follow like where we've come from with New Zealand dollar against United States dollar. Now I know they had a recent thanks to one of my partners. I know they had recent news within New Zealand that I believe their prime minister, she stepped down for whatever reason, and she was clearly loved by the country, the community that she represented. So you saw a little bit of a decline, a negative effect against that, but the course is still, as like Christine Lagarde, European Central Bank president, staying the course. So the course is still staying true. So pairs such as euro, British pound for UK, you're seeing them all be on a bullish tear against the United States dollar, guys. So I still believe that, with NZD USD, that we're still bullish based off of what price action is showing us. Let's look at where we were identifying potential entries and if we can find another entry within this market to continue up, and then like look at something else. So this week, I know, well, last week we were bullish, right? So let's start from where we were last week. So last week, Friday, the market actually rose. It got hawkish, very hawkish, aggressively. And this was the area, if you guys, again, from my YouTube followers, if you follow me, you saw I had this area drawn up that same week, and the market shot down. It was either that same week or the prior week. The market shot down against that zone. It never broke our area, but I still kept our area. So I pretty much said, okay, I'm going to buy up from this position right here, which was 63,995. I wrote it Friday all the way up here. But since it pretty much ran into the previous buy zone that I had, I felt comfortable saying that, yes, this is a buy zone that I'm going to look to take, because if you look at it, guys, it broke out of a level of resistance. Now, what's neat about this is that again, the laws that govern the market is pretty straightforward. You just have to be patient enough to see, okay, is this entry too high or is this entry too low? And the only way they identify that is pretty much, trail the market, guys. Learn, like, figure out the data points, what the market is creating. So, for example, the data points I created was finding out that this was going to be a upward channel, right? So a bullish channel. The market had created a channel. Anytime I see a move like this within this like pink zone right here, anytime I see a move like that, I'm pretty confident that once we get a breakout, we may have a slight retest, which it did right there, and then it kind of consolidated, and then it broke out to the upside. So, excuse me, based off of tracking this, guys, I was able to find an entry. Well, I had already entered. I just knew that, it was going to retest within the zone, or I felt comfortable with the retest within the zone to take the market up. Now, what I ended up doing was, like, I think was the smart thing to do, to be able to secure profit on Friday, because really you don't want to get into the I'm holding trades over the weekends unless your position is just phenomenal. And I mean phenomenal, like literally a level of structure, support, resistance, to carry on the market, where you don't have no fear of, one, the market spread opening, too aggressively, or you don't have any fear of the swap fee. I'm against giving the money back to the market, guys. So I really try to stray away from not holding my trades over the weekends, but it's your call. It depends on what you're looking at, guys. I just say that, if you made profit, might as well go ahead and secure that. Now, the market did continue to go up, and what we were waiting for, we was waiting for a position here. The market did continue to go up. It was choppy, and then eventually it came down. Let's look at what it did right now. The reason why I had this area is because this was a level of resistance that I expected the market to break out. Hold that thought real quick, guys. Hold that thought real quick. Chef on the charts, chef in the kitchen. I had to check on that food. But anyway, this area, this buy zone that we were looking at was 64.425. Let's look at how the market played out. So it makes sense that when I turn it to a line chart, this was a prior level of resistance, and as it broke out of that level, you look at it as what? Now a previous high that the market could retest. Let's see how the market played out, and I'll stop it. There it was. There it was. The retest that put us right back into that zone. So when you're looking for your areas of opportunity, this is where it relies on you being patient enough to wait for the market to give you enough information. That's all the market is, guys, is that it's information that you're collecting more data, and you have to be patient enough. Instead of being impulsive, you need to be reactive or responsive. I guess I want to use the word responsive versus react, because of react, we're always reacting to any type of move that we may potentially see. But when you're responding, it's like, okay, I got the data. Now I'm going to execute based off the information I already have, if that makes sense. So based off the information we already had, I felt comfortable to say that even though we didn't get that buy zone that prior week, that once the market broke that buy zone again, I could still use that same information, and that pretty much put us in profit, guys. If you look, let's look at where the market is currently at right now. Now I can show you another entry that I was looking at, where I showed the guys, right? Now, this was a prior buy zone. So as the market broke out of this area, I was looking at this zone for the market to continue in this direction to the upside, right? So this was a prior buy zone. Well, I didn't buy here, but this was another level that I was looking for the market to retest based off the momentum in order to continue to the Oh, excuse me, in order to continue to the upside. And if you look, guys, the market did in fact retest back into that zone. Can't see it on the 4 hour. You probably have to see it on like a 1 hour or something. It was crazy because when it happened, it was like so fast that I'm sure if you weren't paying attention, the market didn't register. Now, this came on the top of my zone, not into my zone, but it still validates me being comfortable to take the trade. Now, this is the part where people have the confusion of like, okay, if I'm waiting for an entry, what is my risk? Basically, what is my stop loss, right? Now, we'll do another class detailing more about stop losses, guys, but I just want to give you guys a perspective that because I see so many people struggle. It depends on your account, obviously. Again, if you were on one of my calls, I'll refer that to which one. What did I do? Was that on the market? I'll have to tag that video where I talked about the percentage base, like what you're looking at as far as like your risk to reward ratio and your percentage that you're trying to gain versus lose, right? Normally, it shouldn't be 2 to 3% of your account, but let's be honest. The minute that we don't have $100,000 in this trading account, we're already over leveraging even at a 0.01. So again, you have to do 2 to 3% of your account what you're okay with losing. Normally, 2 to 3% of your account will put you, based off of a 0.01, will put you around that 20 to 30 pip stop loss normally, right? I don't really promote stop losses that's greater than 30 unless it's like indices where it's like stuff like that is needed. But obviously, your risk level is lower. You're not moving like at a standard and you're risking, 150 pips. Like that's like $10,000. You know what I'm saying? Like, no, yeah, that's like $10,000 or something crazy like that, right? So if I was looking at, price to come within the zone, say I did have an alert, on the top of the zone and I caught, which I did catch this. I don't even know how I caught this, but I caught this. So even 30 pips put us below our previous entry, opening us up to the opportunity to say that, okay, if it comes back here, down here, this was my prior entry. So I may still be bullish with the potential buy zone if the market was to take me out. And then let's just see where 20 pips will put us at. Just above our previous entry. Are y'all seeing that? So even if we were to take a loss, right? Even if you were to take a loss based off of this setup, it's like, ah, man, I should have been more patient to wait from our prior entry to see if we're going to actually create a new level of support, which we in fact should in theory, unless the market is trending up. And if you just kind of see on this pathway, the market is trending up unless it comes down to the zone. Now, I do know that in real time, the market did come back to the zone. So I don't know where we're currently at. So I'll just, play the market so we can see. But based off of this right here, the market looks like it's trending up until we get a break. Now we have this zone. Don't be confused by saying, okay, well, once the market broke this zone, like broke that trend line, that bull move is no longer valid. No, guys, you have to still play the zone. We could be ranging now. Again, understanding the three ways the market move up, down, sideways. We could be moving sideways to make a decision. Now, that can open you up to opportunity to say, if it reaches up here and rejects again, I may be catching the sell. But overall, guys, the market has been definitely creating like higher highs and higher lows. So let's see in real time what the market did based off of what I just did right here. Wow. I mean, if you look at that, that's real time. Respecting the trend, right? Respecting the trend upward. So after this zone has been played, the market is now trending up. Now, what would you do? Is your question? Now, what would you do based off of what would you do? What we will be looking for now based off of the market trending up, right? If we're still comfortable with it trending up now based off that higher high, higher low, previous high, previous low, when you're looking for sells, previous lows, when you're looking for buys, previous highs, look where the market rejected off of, right? And we're just keeping it basic. We're still at a line chart. We're not even showing like candles yet to see what the market may be possibly doing. But look, This was a previous high right here. The market did, in fact, and if you look at it, support was on the opposite side of that. It's crazy how that works out, right? This was a previous high. The market retested into this high. Now let's look at it based off of candlestick patterns. Oh, wow. This was a bullish engulfing, and the market returned to pretty much consolidation or a doji on the opposite side. That makes total sense to me. But as far as right now, we're trending up for the market to push up. But Gray, what did you want control of the screen for? You still needed that? You can talk too, bro. If y'all can hear me. You was trying to show me something?
Nah, I wanted you to paper trade on it. Just the at the bottom where it says buy and sell, you could paper trade on it. Like just hit the buy and sell when you're doing like the rewind and forward thing. I was playing with it last night.
Hold up. Let me see what you were trying to show me.
Rewind it, and the buy and sell button to come up. I had fun doing that shit last night. I made like $200,000.
Let me see. Okay, so hitting the buy button does. Oh, that's what this is for.
Yeah.
So this will allow people to demo trade without setting up their broker account. Oh, wow. Wow.
And don't leave that box open because it show you how much you're making. Redo it. Yeah.
Okay, let me play this forward.
Rewind it to the support over here on the 17th.
All right.
Rewind about, you see you up $1. That's what's up. You up $2.
We said over here, didn't we? Yeah, we said over here, right? Yeah. Okay. And it buys at or sells at market execution, right? So current.
Right. But go ahead, play with. I mean, do it like
no, I'm doing. I want to see what it looks like. $2, $3.
We in the money. We in the money. Sell. Take profit. Flat when you press flatten at the bottom. Oh, okay. Hit flatten to like take your profit right there. Yep. Flatten it, then hit a sell. There you go. Hit a sell.
So why did it tell me to sell up here?
Did you hit a sell?
Nah.
That's probably from your previous one, the one that you did before.
But I pressed the button. Oh, okay. I see.
Rewind it all the way back. I'm saying it's fun. I was doing this shit last night. I made 200 grand, bro.
That's pretty cool. That's pretty. I'm gonna look at that later on, but that's pretty neat, yo. I was wondering what that was for. I got to look at these amenities that they start bringing up. But no, yeah, that's actually good. That's actually good. So even for somebody who's still nervous about trading, it's like they can see it. Obviously, the results won't be the same. And I got to look at that. Like how to change the lot size.
It's on the trading panel. Go down to the trading panel. But go ahead. We'll talk about that later.
Let me just see one more time. Oh, so down here you change the lot size? Yeah.
The trading panel. That's why I wanted to get. I was going to show you on the mouth.
Okay. Yeah, we'll get to it later. Yeah. But yeah, guys, learn something new every day, right? For sure, man. But look at how we've been pretty much maintaining the zone. So as long as we maintain one, the trend line doesn't have to. I'm not a fan of like trend lines, guys, but if it's respecting it, definitely. We do have another channel that's being produced. As well as a previous retest of this high, it did push down and rejected away. So when you spot that on an hour time frame, understand what wicks are. Wicks are movements that the market went down there and got away from aggressively. So we have 2 wicks that pushed the market down, that pushed away from the market, and we retested a previous high that we broke out of. We just need the market to continue up. This looks like a buy zone to me. The only thing is, will it do like a shallow retest like understand there's retest on different time frames, guys. So say you missed this and you felt like you did miss it. Well, your next objective would be to break it down on a smaller time frame and see if you can catch the previous high, which would be like right here, 15-minute, all the way up. So you have a zone where you can pretty much say that, okay, I feel comfortable with catching a pullback here, even right here, guys. Are you seeing that? So somebody could have caught a pullback right there in order to still, catch the trade. Just because you don't catch the ultimate entry, just track the market on what it's doing. You know what I'm saying? So as we're getting price action and we're already past 9 o'clock, right? So anything that could throw the market off has already been priced in. Now you're just dealing with what the market is doing up until other news outlets present itself. But as far as we're seeing right here, one, we have the identification of a bullish trend. We have a bullish engulfing right here, engulfing all these candles, retest. And if you look at, it's probably like 618 of this, 61% of it. Yep, structure closed at 618, but it rejected 786. You definitely want to see movements like this, and obviously we still want the momentum to carry us up to the upside and then continue to take the trade from there. So yeah, on the hour it's been showing but like I said, if you guys were following me earlier, what was that, this morning? Yeah, you guys were on this morning. So remember we were talking about like the momentum being strong. Right here, the momentum is pretty much getting a little scarce. And we may be finding a potential reversal. So you see, market pretty much reversed, right here. And we have the start of bullish momentum. The start is really at these candles. So what time is that? 9 o'clock. So that makes sense. 9 o'clock is the start of our bullish momentum in true fashion. Yes, we started having bullish momentum around 8, but that was indecisive movements. Now that we have flat bottoms, we just need a continuation of it. And I think this is a good setup for us to take the market up. So yeah, I like this actually. But what I want to do is I want to catch another break and retest just in case it wants to pull back down harder. For you guys, if the market pulls back down, obviously, buy within this zone. But I'm going to wait for a break and retest like slightly above here. If I get that, that'll make me a little bit more confident to take the trade just because from where we're at and we have no momentum. And that will allow another momentum candle to be produced, given a little bit more clarity that market is going to push up. So that's what I would like to see. And then a retest back into the zone. So if I'm giving out a potential move to the upside, then just directly below that zone, yeah, I would probably just push it into the zone just in case. So 2 to 3%, guys. 2 to 3%. Yeah, we have nothing to really reference the market off of. Other than I'm trying to find a previous high. So yeah. Once price breaks out of this, it is out of there. We don't even have another level until, yeah, we don't even have another level until pretty much we get to this area, this resistance up here, which would be at, let me see. 65, 653. Even though I think that we're going higher than that, it's just that, with the momentum, obviously, if it reaches this resistance, It's going to pull back. It should pull back. We don't know how vicious the pullback would be, but I can see that if we break here, we probably will break slightly above and then pull back into the zone if the momentum doesn't just carry it on. But you just look at it, it's just giving you all the signs that it wants to continue up. This was the pullback in order to continue the market going up, respecting the support on all the way on the opposite side. I mean, if I didn't know any better, I would think that based off of price action right now, that this was a big inverted head and shoulder on the daily time frame. I mean, look at that. On the daily time frame, like, yeah, that's crazy. Respecting this support down here. Oh yeah, we may be.
Can they go to the 74 up there on that wick?
The 74. Yeah, potentially, but
Wow.
we just but not in the way that you think. Like it's not gonna just give this like in a straight line and stuff, you know what I mean? It's gonna mess people over. So it'll probably have like a breakout and then potentially get to an area where there's imbalance and then pull back hard, giving people the perception. I mean, the pullback can be so vicious because if you look at it, all this is nothing but momentum. So, and what I mean is that because there haven't been no, like, you see how like even when this move came up, it pulled back, and then most people would be like, oh, it's selling, but really it pulled back on the weekly time frame. We haven't had that, and there's so much imbalance going on. I wouldn't be surprised that if we got somewhere up here or where imbalance is at and that market collapsed, giving you that perception. Now, that will line up with what me and you were looking at for March. You know what I'm saying? So I could honestly see that if the momentum doesn't carry it all up all the way here, somewhere within these zones, like specifically like right here, yo. Specifically, like if I'm just being honest, like right here, market pull up in this zone and then pull back hard, like because there's just so much imbalance that it has yet to retest it. Even though this is support, it has to like come back to one of these highs. So you see how this one came back to one of these highs? Like on this left-hand side, boom, break, retest, boom, retest back into one of this high from this support structure. So we have yet to have any of that. I don't believe this is literally what they want you to do, to be like, oh man, head and shoulder. Wednesday, if the market came up here, Wednesday would be the perfect day to say, you know what, let me just bring all this down back to the support level down here. You know what I'm saying? So it's like, I just be watchful for that. The momentum is definitely carrying it up, but that's also because of like, the banks have been aggressively, hiking their prices. Other variables that's been going on, I can see like a collapse. You know what I'm saying? Because how aggressive they're hiking up. I don't know what's going on in New Zealand right now. So I don't know if like their economy is doing good or bad, but I know their economy, just like everybody else, is trying to recover. So yeah, I could definitely see that, but we'll just have to play the fence. You know what I'm saying? We'll just have to play what the market is showing us and then, get an idea from there. But man, I mean, that would make sense. And then if it put it back up here, March, this is March where it fell down. So if it came back up here towards March, like I said, I'm looking at one of these areas where March, this market will literally reverse itself. So if you look at that, that would have been the perfect entry that we would have had. The perfect, but let's wait for that break and retest and then enter accordingly, right? What were y'all looking at? Oh, I can even show something with I can show something with US 30 too. So about entries with US 30. So same thing, guys. Like if you look now, these entries that I had that you guys can see right now, obviously you guys know within my community how I got these entries, but everybody else may be like, well, how'd you get these entries? Now we did take a loss trying to buy high up here, but I literally should have been able to identify that was not a buy move. That's why you have to go into smaller time frames, but also back out to bigger time frames to see the whole picture, but also to get the fine detailed information that's just not being, thrown at you. So right here, the market had a gap up, right? It had a gap up. And if you see, I had support structure down there. Now the market did push down a little bit more aggressive than I anticipated. But that's why with US 30, you have 150 to 200 pip stop loss, depending on your risk. Now, there are other traders that may say, I'm not doing that because they may be risking a lot more. So they may be like, at the very least, having like a 50 pip stop loss. You know what I'm saying? Me, I stretch it to anywhere from that 100 to 200. I don't go beyond 200 because of how I'm moving. But again, I would have still been favorable if I would have used like a 200 pip stop loss, right? But you want to get it as accurate as possible. So in hindsight, when you look at the high that it broke out of, this was the high. If you literally would have put yourself in this position, you would have really caught the bottom almost. You know what I'm saying? You'd have been off by maybe like 20, 30, 50 pips, but you would have caught somewhere at the bottom. The average person, yeah, you would have been off like maybe like 100 pips. You maybe, if you caught it down here or waited for structure, you maybe would have been anywhere from like 70 to 100 pips. That's not bad when it comes to US 30. That's not bad at all. So again, risk management, guys. And again, we'll have a class based off of that. But look at the support structure down here. Now, let me turn it to a line chart where it was easy for me to say, okay, we haven't been down here. We have structure that has been maintaining above the zone. So the uptrend has been maintaining even though we're ranging. So we are moving sideways. The market on the 4-hour time frame has yet to break out of any structure, right? But if we just look at it, if we just draw our trend, we've been maintaining a trend line, have we not? Absolutely, right? So with me feeling comfortable that we've been maintaining an uptrend at least from what day is this? This thing is in my way. December 19th. So since December 19th, US 30 has been in an uptrend, right? So I've felt confident within that. Waiting on, the burst to the upside, but we've been doing that, guys. So if you see the data points that the market has been pushing out, right here, you have a data point. Sometimes you can go with it. It depends on who you are as a trader. So a lot of people say go structure to the structure because that'll give you like the better position on what you're looking for. But I like to go wick to wick because of the variables that we can't cover for. So if the market decides to shoot down 100 pips or shoot up 100 pips, I can't expect that, but I can cover for it by having, the market project off of this trend line, right? So we're just looking at either way, however you want to do it. So, I know some people will probably just do structure. So if you do structure, still understand the market can, if it pulls back a little bit lower, it may just be, the banks manipulating the market in order to make you get out of your position. Hopefully you're moving decently where, you're not really affected by a push up or a push down that seems dramatic and it's literally going to flip on you on the opposite side. So data point right here, 1, 2, 3, and then the fourth probably was in a breakout because now that we have this aggressive move to the upside, I know that for between 1, 2 normally is the bigger move. So when the market, whether it's ranging sideways or whether it's trending up, the second time it touches a price zone or a trend line or a zone, that's the bigger move. And you can fact check this by seeing what happened. So when the market pretty much touched this trend line, you see it threw some confusion, but it made a big move to the upside before meeting the trend that's connecting this this uptrend, right? Well, the line that's connecting this uptrend. Y'all see that? So this is the third one. Embedded is probably the fourth one somewhere until we get a move down back to the downside. I don't know if we'll get that like Wednesday. So we do need a fourth move to touch, and that'll be the breakout. So I don't know from there. The breakout could be to the upside, the breakout could be to the downside, but by the time it gets back down here, you'll pretty much know, you know what I'm saying? From just this position, this move right here, I do see that if price comes back down here for our fourth touch, more than likely we're bullish, right? Just based off this pattern down here. More than likely we're bullish, but I don't just hold that and say, hey, man, we're going to be bullish based off of this move. I'm stronger in my fundamentals. So I do trust a lot what information I get from like Bloomberg or other news outlets, guys. But more than likely, when we have our fourth touch, which could be represented, I don't know, next week, in the next 2 weeks, something like that, will probably be bullish to the upside from there, guys. But we are ranging. If you just look at it, we are ranging, but that would have been definitely another entry. So, for example, right now, when we're looking at the market, we can tell that it's bullish. This is a pullback in order to bring the market up. Look at it. Look at the data points that it's giving you. It's giving you a bullish engulfing right here. This is a bullish engulfing. All you probably can see is probably like bullish movements. Let's see. Basically, I mean, you had that one aggressive pullback to throw people off. And you see the fact that it violated it, we know that it's not selling. So yeah, this probably had somebody like who follows Hakanashi saying that, oh man, this is going to be a good position to sell back. Market dropped down, giving you that perception, and then swept it up on the other side. We are bullish, guys. Based off of price action right now, we're bullish. So if I just turn it back to candlesticks, you'll see that the market drove right back into what? A previous high that it broke out of. Where's that high? Right here. Again, when you see structure, guys, just know that there's wicks. Like we may not be able to see the wicks based off the line chart, but you'll be able to see like the structure that's formed, right? So turn it back to candles, you'll see that, okay, structure, wick right here, wick to the downside. And really, the market retested back into consolidation. This was like, you know, a shallow channel of consolidation, but it retested back into that, pushing the market up. Well, if we're trending up, where do we look for our next position if we felt like, oh man, I missed this entry, so where should I be looking to get in now? Well, guys, we know that any move that we enter on should reflect a 38 to 50% retracement, right? 38, if the momentum is high, then in 38 it will be a shallow retracement and take the market up. But we definitely want to look for those 50%. It's better to put yourself at that 50% than to always try to check that 38%. It depends on what time frame you're on. But if this is US 30, let's see if what would happen if we enter this trade and it decided to come down deeper. So say we entered at the 382. All right, that's 30 pips right there to the 50%. That's already, for most people, 3% of their account. All right, 58%, 70. Now, this is US 30, so we know that obviously the stop loss is higher. All right, 100 pips. So this whole move is from 38 pips, from 38% to down here is 200 pips. So that's basically 38% of it. Well, 75 because I'm coming up. So it's like 75% of this move. The market could sweep 100% of this or the full 75 from where it's at and then decide to push up, right? That's where if you're putting yourself at 50, you kind of give yourself a little wiggle room. If you put yourself at 618, this is considered the golden zone. So this area is considered for prime entries, which if you look at 50% and 618, they line up with a previous high. But it just depends on what the market is giving us, guys. This is a previous high right here, but embedded on this time frame that you can't see is a smaller previous high, right? Still not showing us. Basically right here, well, support, but you have the support. So this was the previous high. Market retested that. Now the market looks like it's creating support. If you get a push up, you know what I'm saying, based off of this move, then yeah, we're bullish. But again, instead of trying to catch it down here, because it may not be a shallow retracement, it may still be retesting and, you know, wanting to push down. The better move would be what, to get a little bit more clarification, for the market to break the top of this zone, because that's resistance, and then carry on from there. So that would be another way of how you could get an entry if you felt like, oh man, I missed the move, but I don't want to jump in haphazardly or whatnot. It depends on who you are as a trader. Me, I'm more than likely waiting for the market to come within these zones. So I'm probably taking this move. You know what I'm saying, guys? Like me personally. But again, it just depends. If I feel like, ah, man, the market's not giving me enough data for me to comfortably take the move, then I have to wait for price action to play. And that's fine. Break, wait for the market to retest back into that zone or back where it broke out of. Simple as that. Knowing that, you know, the market can dive a little bit deeper, you know, we just have to be cautious on that. So even if you were looking at to take a buy from this market, right? Based off of what I was saying off of US 30, right? Well, 160 pips would put us at, not 160, yeah, 166 pips would put us at that 50% mark. We don't necessarily want to give that up, so we could be okay with, if we took the loss, 120 pips based at the momentum candle, right? From here, if price started shooting up. But we have to wait for price to break this area first, so we don't enter when price is here, because it can pull back down here and then shoot up. We wait for it to literally break, giving you a candle like that broke slightly above that closed, and then retest back into the zone. Sometimes, like with US 30 and, you know, cryptocurrency, things like that, they're so aggressive that the retests are shallow. So you have to be able to spot them, like oil did for us earlier today. Earlier today, we were looking at oil and did a shallow retracement. Where was it at? It was on the hour time frame. Right here, it was a shallow retracement. And if we didn't look at it, we would have missed the chance to get in oil, because we were waiting on, you know, the pullback all the way back up here. That was money to be made. Anybody that trades oil, that's money to be made. That's good profit. 100 points. What? Easy money, right? Easy. So yeah, guys, that's pretty much it, what I covered for today. My guys that's on the call, do y'all have anything that y'all were looking at that y'all want me to go over while we're still on?
I was looking at Ethereum.
Ethereum?
Yeah.
All right, Ethereum broke that zone. I don't know. I'm still bullish on it, to be completely honest. I needed to break this structure because it looks like now it just wants to create support. But you know, we'll see what the momentum is like, because even if this thing does decide to push down more aggressively, we should get some type of small retracement back up here. That's like a shallow retracement. I don't like that. I would like to see this thing come back up and then push down. But, you know, we're at support right now. So we just have to see what the market wants to do from here. Broke up out of this zone, but I still think that even though we have the rising wedge that broke up out of it, because normally when you get the rising wedge after the move has been made, you know, you start to have reversals. Well, we'll see. So I do expect it to form some type of structure down here, because we are at support. It looks like it came right back into that fake out zone. But the market hasn't shown us yet that it wants to continue to fall unless it breaks that zone. And yeah, we're heading back to these previous highs. If you look at it, if it breaks that zone, we're heading back to these previous highs down here. And then we'll figure out what the market is trying to do. But it makes sense. It makes all the sense in the world. Now, what were you looking at, though? What were you looking for, Santana?
Oh, I was well, I always watch that one or whatever, but it came down. I had my alert thing set. It got to like 540, and I had it like hitting support around 512, and then going back up. And that's exactly what it is.
And you know what I'm about to ask you. You know what I'm about to ask you. What you think? What you think I'm about to ask you?
Did I take it?
So what's your answer?
Yes, I did.
Oh, okay. All right. Okay. Brand new.
What happened? What happened?
Brand new. Okay. She
What
said she took
happened?
her trade. So she
What?
said you ain't hear her say that so she had Ethereum. She wasn't trading
I
it like
did. I
we
caught a
were.
little
She
piece
was
of it.
patient enough to say that I was waiting for it to come down to 15, 12. And it did come down. I
What?
mean, on the dot, like damn near, like 15, 12. She said,
Mine says 15, 17. Is it because I'm on a different broker or something?
yeah. So
Oh, okay.
it's yeah, 15. Well, yeah, because of different brokers and stuff. That's why. So, but they're not off by like a lot. You know what I'm saying? Like oil commodities, you'll be off by like a lot. So that's why I don't give out like trade signals for that. But most of these brokers are within like at least 100 to 50 pips with like cryptocurrency. You know what I'm saying? But she said it came down to 15, 12. That's what she was waiting for. And she took the trade. And you see, she got the bounce up based off of the support. So I was just, celebrating her because you know how many times she's in the past been like, I didn't take this trade, but had fire ass entries and shit. So definitely excited for her for that one today. Like, yeah. Um, we just have to wait and see what the market is doing. To me, this looks like a fake out still. But again, I'm not trading it aggressively. I just want to manage what the trend is doing. But we could get, again, a push down here to fully create support, which it could start, jacking this thing down a little bit lower. If not, this is like the previous high that the market produced, like right here. Yep. And it came all the way down within that zone. So previous high the market produced, rejected that. So yeah, based off of what I'm seeing, I like what I'm seeing. It's just that the market has to pretty much start pushing up from here, if not create support. So I already said that it could pull back down because we haven't had true structure form within that. But again, if it's breaking and retesting, then you'll get a push to the upside. But other than that, we'll just have to see what it does based off of this zone right here. But nah, that's a good call, yo. So if this thing starts reversing on you,
I think it's going up. I think it's
yeah, no,
not going to go back
I
down.
agree. Well, what I'm saying for Santana is like this thing not reversing. This thing starts pushing up on you. You're in a good position. I mean, you caught a sniper entry with the
Hell yeah.
possibility of it retesting the same entry. You know what I'm saying? You just have to be open minded to that. I don't never say that I got the cleanest entry until that thing is far away from my entry. Then I'll know. But it could possibly retest it or not. Don't depending on how you're moving. I wouldn't say give up your position. You know what I'm saying? But just be cautious that it could reach us back into your zone, your entry.
Yeah, crypto. I'm saying crypto time from time have these Momo bulls that come in there and they like you got to catch it. You know what I'm saying?
Right.
They like I've seen that a lot of Momo. Like wow, that bitch went up, but it came right back down.
Mm-hmm.
Them
Mm-hmm.
should be nice
So,
though. If you're in there, you better take that profit though.
yep. So, yeah, good play. Like, yo, definitely congratulations, yo. Like, that was a good ass play. Hell, you might not even have seen any drawdown based off of that play. Like, god damn. Let me look at this.
My broker would not give me no entries like that. Like it would be like I almost dead. Almost
Even
dead.
with a pending order?
Yeah, bro. Like man, I be like knowing where shit going, and it just like I even put it under it. Just yeah. Well, this before I haven't done it in a while, but this before I set stop losses and shit.
Did it just do this? Did it just break and retest? Oh no, it's gonna push back into that zone. I like it. I'm about to take this.
You going for a buy? I ain't
Yep.
jumping. Yeah, I'm in
You
the
already
Ethereum.
maxed out.
No, I'm just in the Ethereum one. I just don't want to. I don't want shit to happen.
I got you, bro. So was that 6.4, 670, 6.4, 670. Where we at? 6.4, 670.
Oh, that fucking sucks. Wait 9 seconds left.
I'm about to throw this out in a group. $60 pips. That's straight. But all right, guys, for my YouTube followers, man, thank you guys for supporting this channel as always. Don't forget to hit that like button as well as subscribe and also that notification bell so you can stay up to date on all my content, guys. This is everyone's Jordan year. I believe this is about to be the year of entrepreneurs and investors for real, guys. So see you guys at the top because we're taking everybody to the top with us. Thank you.